here's a comment that's actually there is a question, or at least something that I can answer behind it. Patrick makes a good point. Here's a gem: refinancing versus recasting. I get this question in an email probably twice a month, and especially now that rates are up. When rates are level or down, people just think, hey, I owe $400,000 on my house. I inherited $100,000 from my aunt that passed. I'd like to pay my mortgage down and I want a lower payment. So if rates are the same, or better yet, even lower, you just refinance, you bring $100,000 in at closing, and you have a new lower interest rate and a much lower payment. When rates are higher right now, Aunt Pearl dies, leaves you $100,000, you're certainly not refinancing. So if you own, you come into a windfall, anything more than say $25,000, $30,000, the lender does not have to allow you to do a recast, but most of them will, because they would like to keep the loan on their books. What does that recast mean?
Well, yeah, that's what I was going to
let's
tell you.
let's
Explain
say
it.
you're 2 years into a 30-year loan, so there's 28 years remaining, 28 years of 12 payments, and you owe $400,000. If you pay $300,000 or pay it down to $300,000, your monthly payment on a fixed rate loan, if you have a variable like a 5-1 or a 7-1, it would adjust to account for the new lower principal and pay it off over the remaining term. With a fixed rate loan, your payment is set in your original note.
Right.
So you have to reach out to your lender and ask them to approve a recast that says, what with your interest rate and the new $300,000 loan balance would or should your payment be to pay it off over the remaining term of the loan? Again, I don't know that I've ever had a client try to recast a loan and be told no, but it's not a guaranteed right in your loan documents, in your deed of trust, in your note. You do have to ask them, but it's becoming more and more common for those that do want to pay down their mortgage and want to lower their payment by doing so.
Yeah, and these are really good in situations. Let's talk about this for a minute, because this is, if you have a position, or if you're in a position rather, where you're selling a property and buying another property, and you don't necessarily need the funds from your current home that you're selling to buy the next property. But the idea is that if it was sold, you would take that money and put it into the next property. You can go out and buy the next the property, the up leg, if you will. And when your home sells, take that equity, go to your lender and say, hey, listen, I want to recast the loan. Some lenders out there actually have a program that allow it to happen from the get-go. Take those funds and recast the loan, and that way you're not making it a contingent sell, so to speak, and getting your payment to adjust. So just some food for thought.